Rightio. Okay. Okay, so we have been looking at all these different topics here. What we are going to be doing today is not purely price action. Price action, yes, as it is traded out there. I'm going to be sharing with you today item number 5 on the list there, tops and bottoms. I suppose I should say trading tops and bottoms. It is a very popular technique or concept that is employed out there, but what I've done is I have refined it, and I'm going to be combining it with moving averages, which will make it easier to trade, and I would say to make your entries more precise and accurate. Obviously, if you are not very familiar with price action or a lot of price action techniques, then this should help you. I've simplified it as much as I believe will be easy for you to understand. So we're focusing on how to trade tops and bottoms. Now, tops, trading tops and bottoms, I would say, is perhaps could be a bit of a tricky one, wanting to catch the top and the bottom. And we know what we do. I mean, usually when people talk of catching the top, they are looking to trade downwards. They are looking to sell. That is, when you are even looking at the chart here now, when you are looking to catch the top, you're basically saying the price is going up, it's going up, it's going up, it's going up. I want to catch it at the very top, before it begins to go down, before it drops. So we call that catching the top. And of course, when it comes to the bottom as well, you want to catch the bottom. You want to catch the bottom so that you can actually begin to trade it up, even as we see here. Now, I know it's a bit of a, you might consider this a bit busy because it's got moving averages. If it was a naked chart, of course, it would look like this. A naked chart, like you all know, is basically when the market has no indicators on there. Now, where's my naked chart? Okay, so that's a naked chart. Basically, there are no indicators whatsoever. All those weekly lines, are indicators, but we are going to be trading it today using indicators. So let's start off with a naked chart without indicators. And let me just, give you an idea of what I mean by trading, M's and W's. Consider the word M for mother, W for window or woman. We know this is basically what it is like. When you talk of M's, you're looking at that. That's an M. And that's a W. Now, what I'm going to be looking at today is how you can, by looking at your chart, train your eyes to be able to spot M's and W's in the on the chart so that you are able to trade them. The whole idea is that, when you see the price go up like that, come down like this, go back up, you want to trade this leg all the way down for profit. On the other hand, if it's a W, you want to train your eyes to see the price go like this, a pullback, come back to retest the bottom, and go all the way up for profit. So that's basically what we're going to be looking at today. We are going to be looking at it also using indicators, and that's obviously being the simple moving average. for those of you who have been following me for some time, you know the simple moving average is the one I tend to, is the indicator I tend to, focus on, as it were, during our sessions. So let's go. Now, even though we have drawn M's and W's, the fact is you want to get to a point where your eyes are so trained on spotting M's and W's to the point where, even if it's not looking like a perfect M or a perfect W, you nevertheless will be able to spot it. So I'm going to turn off my camera so we can actually have more space and focus. Okay, so let's just go back in time. This is GU. I mean, it could be any pair. Like I always say, a good strategy should work with most pairs, if not all pairs. That's why it is the case that the strategies and the techniques I use are the ones that work with all pairs, all time frames. Okay, so let's just go back in time and begin to see if we can identify M's and W. I mean, it's everywhere. It's everywhere here. But because I know some of you are new to this, I'm going to be, looking for one that is very clear, very, very clear. One that even a kid can identify. But then obviously we will begin to make progress to the ones that are more tricky to spot. Okay. I suppose we have seen one here. Even before I say where it is, I want you guys to try and see if you can identify a W here. A W will be at the bottom, while an M will be at the top. Obviously, a W is like this. So you want to get in when this leg is forming. So you have this leg and you have this leg. So this is the first leg and this is the second leg. You want to be able to spot it when the second leg is forming so you can take it all the way up. That's the whole idea. So I can see a W here and I'll show you. I suppose you've had enough time to check that. So a W here, this is a W. The first leg going up, a pullback. Okay, let's do that again. The first leg going down, a pullback, an attempt to retest this low. This is the low or the bottom. But see, it's not a perfect W because it did not come all the way here to line up with here. Instead, it stopped here and began to go all the way up. This would have been some good profit. So straight away, you see that this is a W, but it is not a perfect W. As a matter of fact, let me draw some different types of W's for you. Let me draw some different types of W for you. Okay, this is another W. Again, it's not perfect. It's another W there. That's the first leg. It goes there and it begins to do that consolidation there, but eventually it goes down and then it makes its way up. So you can see what makes this one imperfect is the fact that instead of first leg, second leg, that like so, which basically means this part of it will be sharp, it will be a pivot. It wasn't exactly a pivot there. Instead, it was a consolidation or sideways movement before it eventually went up. But nevertheless, it's a W that you need to be able to spot. It's a W, and we're going to be going into the different nuances, and variations shortly. Okay, so like I did say, there are different W's. So you could say this one, this is a perfect W, you know, like so, like so, like so. And it, you know, how about the one we saw a while ago? We saw one a while ago which went down like that, up like this, and it did not come this low. Instead, it went up. I'm sure if you show this to a 4-year-old, 3-year-old, 5-year-old, they will say W. That's what they will call it. Why? Because it's obvious. But then they will tell you, daddy, mommy, auntie, uncle, you didn't draw it properly. Why? Because it's not properly drawn. But hey, we are Forex traders. We want to be able to spot perfect and not so perfect W's on the chart and trade it profitably. So that is another variation. Then you have another variation which could look like this. First leg, pull back, and it comes lower and it goes up. So this second leg did not quite come to retest this first leg, this first low. It didn't come as low. This one went past it. It went past this low. And of course, this one which we just saw, which was like this, came down before going up. So at least I've shown you 4 different types here. It's now your job, begin to start finding it on the chart. You see, when we trade together during the week, as it is my custom, I would try not to use some terminologies. I'll try not to use certain terminologies that I have not taught you, so as not to make things even more complex. But obviously, going forward now, I've taught you this, or at least we're teaching you this. This is an introduction, if you like. I'm going to start making mention of it and letting you see it playing out before our very eyes on the chart. Okay. Now, before we actually move on, I would also be quick to say, like I did say a while ago, this is a popular strategy and technique out there in the Forex space, but not everybody knows how to trade it very well. Some people enter the trade late. I mean, if you're able to enter the trade just on time, not early, if you enter early, well, that could be bad. You want to enter on time. You want to enter at the right time, you know. So some people would enter at the pivot here. That's where some people would enter. Let's do this. Let's do this. Was it we want? Okay. No, that's not what we want. No, just 1 minute, guys. Just 1 minute. Okay. Okay, so the way a lot of traders will enter this trade, if they are trading a W, like I told you, a W is traded when the price is at the bottom, you trade it up. Whereas an M is when the price is at the top, you trade it down. So W at the bottom, M at the top. We are going to be finding an M as well soon. So the way people would trade this is they would enter at the break of the pivot. So a lot of traders will be waiting for the price to break above here first, and then they enter here. But what I'm going to be showing you today is how to enter the price just on time. You see, some traders, when the price goes down, it comes up, goes down again, creating a pivot. And then when the price begins to go up again, when it breaks this high, then they enter. Whereas you could have captured the price here for more pips and profits. You could have captured it here before it got to that line, could have captured it here. So let's go find some trades now. I mean, here, obviously, those who have been trading, with us lately, you know how we tend to trade when the price is moving sideways, when it's consolidating. We definitely want the price to break out of the range. I always draw the blue line. In this case, I'm not drawing the blue line. This could, in this case, I'm not drawing the blue line, but this could represent, the blue box. So when the price is ranging in one place, wait for the break above it and you enter. Again, similar thing, this ranging bit of it, in this case, is just acting as a pivot, an extended pivot, or whatever you might want to call it. But okay, let's go find some actual price movement using the real candles now. I've drawn it out for you. Let's now find some trades. Let's find some trades. Okay. Now, before we do that, actually, let's also look for an M. Let's look for an M. Now, having explained it a while ago, I suppose you could say this is an imperfect M. I know it does not look like an M. I know. But well, you need to picture it. You need to see the M in it. Your eyes have to begin to see the M that no one else can see. Now, by the way, do you know, to be profitable in Forex, like in other things, like in other areas of business, you need to be able to see what the majority cannot see. Hey, I could take that again. I could say that again. You need to be able to see patterns on the chart which the majority cannot or do not see easily. That is what's going to make you or put you head and shoulder above others. That's what's going to make you an expert in Forex trading. That's what's going to begin to make you a master. You begin to gain mastery when you can identify or spot things which is not or which are not common necessarily to everyone else. Now, there's a W here. I'm sure you could have seen that. There's a W here. But we're not looking for W's, we're looking for M. There's an M here, not so clear, but let's find one that is clear. Oh yeah, you need to be able to see what others cannot see. Oh yeah. That's why sometimes when you bear with me, when you sit before some preachers, yes, Bible preachers, you go away with something deep, something you've not heard before. Why? Because they give themselves to the word, to prayer, and to the spirit. Well, bear with me. I just had to throw that in. I just had to throw that in. Now, I'm not talking of those who just come up with words, because this is not a Bible class, but you know, there are some these days who just come up with words that you cannot find in the Bible, and wondering, you are adding your own interpretation to the Bible, sir. That is not what the Bible is saying there. But anyway, there's an M here. Again, it's not perfect, but it's good enough. I know some of you would have been expecting it to be sharp, 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 sharp. It doesn't work like that all the time. It does not work like that all the time. Let me erase it. Now, this one danced around a bit. The price was just dancing around. Instead of the price to come up and down, it began to do almost go sideways. It didn't come down, kind of like almost going sideways, but going lower and lower each time, if you can see it. So as opposed to it just coming down like so, it still came down, but at a different angle. A different angle, and it went up a different angle, as opposed to going up like so and then dropping. But hey, again, you need to be able to spot things that the majority cannot spot. That's why you are part of GWT. We have been doing this for a long time, and regardless of when you come on board, once it is the case that you are part of GWT, hey, you've been indoctrinated, if that's the right word. Indoctrinated sounds like bringing you into a cult. That's not what I mean, but you know what I mean. Okay, I'm having fun here. I hope you guys are having fun. Now, maybe we should start with this. Let's start with this. Let's start with how or where we would have entered this trade. So I've only showed you one M. We could be here all day, you know. Since you get the picture now, let's just begin to delve into it. Again, this is what we will consider the pivot. Some people might call it the neckline. That's fine. I suppose maybe the neckline might be a better word, since it's not a sharp edge. When you talk of pivot, you usually will think of something sharp. This is not, well, whatever. You know what I want. Let's call it that. So some people want to only trade it when the price goes up like that, comes down, up again, and when it begins to go down, when the price breaks the neckline, that is when you will enter with confidence, knowing that it's most likely going to continue all the way down. Well, guess what? It came down here, it went up, but it didn't go back, you know, it didn't go higher. That is the whole idea. So if you had entered here and the price went down, you took some profit, you didn't take everything, you didn't close all your trades, and it came back up, the whole idea is, being that you are trading M and M, you are more or less saying, I have ascertained that this is the top, which means price is not going to go higher than this area for some time to come. If we go into the future, I'm sure price has definitely gone past there, gone past this top. But at least when you first get an M, it means price would not, it means that is the high. Because this one tried pushing up, it didn't go higher. So this was a high. So also with the W, if you spot a W, a correct W, price would most likely not break it for some time. Okay, now something else I'm sure you probably are asking. Yes, I think I heard somebody asking it in their heart, in their mind, but they didn't say it. We said it looks like an M. You might have started from here. You might have started from here. You might have started from here. First leg, boom, boom, boom. But guess what? It actually started from around here. It was actually a long leg or a long wave. And guess what that tells me? It means that since this first leg was this long, you're probably going to get a big drop going down as well. Woohoo! My goodness, I gave that to you free of charge. Free of charge. Free of charge. Somebody says price will not break the M and the W for some time. Absolutely. I mean, well, if it does break, I mean, obviously, we know no strategy, no concept is 100% guaranteed or guaranteeable, but most of the time it works, you know. So look at this. It came all the way from here. It came all the way from there. And it started dropping, even though it was doing a zigzag, zigzag, zigzag. Oh, keep on doing zigzag if you like, but you are going down. You're going down, baby. Boom. Now, imagine if you had the confidence to stay in this trade. Now, by the way, I thought to tell you guys that we are going to be going, I am going to be, I don't know about you guys, but I am going to be holding on to some trades for longer now, you know, because, you know, when you're trading prop accounts, you know, they make you trade, they kind of like compel you to trade in a way that you don't normally trade. I mean, they put restrictions in place. And because you have a time limit within which to pass the test, you just have to do things, apply a different strategy. And one of the strategies to apply is to let your trades run so that you can basically capture as much pips as you can and pass the test and move on. But see this, guys, it went all the way down. That's some good pips, good number of pips to put in your pocket. Okay. What are we going to do now? We're going to throw in some moving averages. We are going to throw in some moving averages now. Okay. Right. Now, what did I say? People would usually enter at the break of the neckline. I know I still sound like I'm speaking Greek to some of you. That's fine. That's fine. You will get it. Don't worry. You will get it. You will get it. There's going to be time for question and answers. You will get it. You will get it. Right here. So somebody would have entered the trade on this candle. Let's just mark that candle. Somebody would have entered, majority of traders, because they are waiting for the break of the neckline. Majority of traders would enter on this candle when it is clear it has broken the neckline. Okay. How about us? Let's see if we can enter earlier. I mean, sometimes it might not, our entry might not be necessarily earlier, or it might be more or less the same spot where others will enter, but let's check this one out first. Let's pull out our regular moving averages, starting with the 10. And let's stick on the 50 as well. Stick on the 50, which is blue. And stick on the 200, which is red. Okay, voila. So where would we have entered the trade with this? You know, two reasons why, you know, the moving averages help. You know, one, it could help you enter the trade, you know, I don't want to use the wrong word now. I mean, I used the word earlier before, and you know, I meant to say too early. You know, but yes, you want to enter the trade earlier than others, or you want to enter before others. I suppose that's a better word. You want to enter, you want to be able to get in the trade before others, not necessarily early, because if you say early, it means, you know, it's not time yet. I suppose that's the way, you know, some people interpret early. If somebody, you know, gives you an appointment, say for 2 o'clock, and you get there at, you know, 1:55, I'll say, okay, you're early. sometimes 2 o'clock, you are early, that's fine. But obviously if it's 1 minute past, even then it's late. In the West, at least in the UK, if for instance you are given an appointment for 2 o'clock and you get there at 1:45, they will say you are early. You would have thought that's a good thing, but in a sense, some people are meaning you are too early. Maybe 5 minutes before, that would have been good. So 15 minutes before, you are too early. So anyway, what I'm saying is, let me not confuse you by using the word early. What I meant was you will enter the trade before others, which is fine, which means you collect more pips. When I say early, it means you are entering it earlier than you ought to enter it when there's no confirmation yet. You need to wait for confirmation. So when the price breaks the neckline, for some people that's the confirmation, fine. At least the good thing is they still win the trade. It's just that they left some money on the table. Now with this one, how would I trade it? Using the moving average. Not all examples are going to be perfect examples. There are going to be some examples where it's better to use the moving average as an entry guide. Other times, just go with the neckline or with some other price action. So with this one now, I suppose seeing all these wicks at the top, that would have been an indication that that the move up is exhausted. The buyers who push the price up, they've run out of steam. That's why it's now beginning to range or do some sideways movement, and the candles are smaller as well compared to some of these big candles. And just one extra tip, guys, just one extra tip. If it's an uptrend, obviously you would have predominant green candles, and they would usually be bigger than the red ones. So the trend, the price going in a particular direction, there should be a predominant color. Just like here, when it's going down, the predominant color is red. From here, even the predominant color is red. You have green in between, but the green tend to be smaller. That is a nugget I just dropped there. Try and be attentive to every single thing I say, guys, because there are times when even things I did not plan to say, I see it and I throw it in. So one of the things about a trend, if the price is going down, you should have predominant red colors. And the candles, those red candles should be bigger than the other one. The reverse is true if it's opposite. So here, for instance, the price is pushing up, pushing up, pushing up. Big candles, big candles. This was the last big candle, if you like. Then you started having smaller candles, both red and green, and they were all having wicks at the top, which basically speak of rejection of higher prices. It means that the price is now ready to drop. So that's price action. If you didn't have the moving averages there, the wicks at the top would have told you that the price is about to drop. Now I think it was last week or the week before. I know we were in a sell, and Yemisi saw a wick at the bottom, and she said she came out because she saw the wick. I stubbornly stayed in, and boom, we basically gave back some money to the market. But anyway, price action would have suggested that. But we are trading the M's and the W here. Like I said, some people will enter here. This is not a very good example of when using the moving average would have been the better option. So waiting for the break of the neck of the pattern, the break of the neck of the M formation, and price action would have been a better entry. But let's go on. Let's go see if there are, so you, guys, you can see, Yemisi is dropping some notes in there. Those are very vital notes she's dropping in there. Now, you might wonder who Yemisi is, but obviously because the name Yemisi is not there, Olofunke is the name there. She's dropping some vital clues there. Okay, so let's look for a better example. Let's look for a better example. Let's clean this up. Okay, so let's scroll back and look for a better example when an M and W would have been a good way to enter. Now, sometimes it might be difficult to spot. This is also, this is also some sort of M, but it's more of, sorry, some sort of W, but it is more of a V. I'm sure you can see that. It's more of a V. Down, up, it's more of a V. Although some people might say, oh, I can see an M there. Well, an M usually would mean that you have a predominant color and let me take this off. A W, for instance, would mean that you have this predominant color red going down, and you had this one push in the opposite direction, because when you have an M and a W, you definitely would have the two colors at play. So predominantly red going down, green going up, it came down again before moving up. So in a sense, yes, it's a W, which obviously you will begin to understand a lot more once your eyes are better trained to spot them. Otherwise, also see it as a V. It's more like a V. I know it's more like a V. A V also tells you that the price is going to be going up. Whereas an inverted V, so you have a V, price going up, or an inverted V. I don't want to call it a reverse V, but you know what I mean. Means the price is going down. Okay. Now I'm teaching a whole lot more than I plan to teach today, but that's fine. That's fine. I want to stay on track. I don't want us to gain too much concept today and become even more confused. Okay, so let's look for an M and W. Okay. So see these guys. Now somebody might say, oh, this is an M. It should be going down. Very good. If you see an M at the bottom of the chart, don't trade it as an M. Don't trade it as an M formation. Because up until now, the price was coming down. So when the price is coming down like this, you are looking to trade a W. You are looking for a W formation. You're looking for a W pattern. So if instead of a W forming, an M now forms, don't trade it. That is the market trying to play games with you. Don't trade it. Just ignore it. And besides, you guys are seeing something else, I'm sure. The yellow is on top of the blue. That's the 10 is on top of the 50. You know not to be selling. You know not to be selling when it's like this. You only sell when you have the blue on top. If the blue is below, you don't want to, be selling. Here, for instance, you have the blue on top of the yellow. But by the time they get here, the yellow has crossed on top, has gone on top. It was at the bottom here, all the way, still at the bottom, still at the bottom, still at the bottom. But here it crossed over. So that is another hint. You don't want to be selling. Even though you see an M formation, you're not moved. Don't let the market fool you in this case. So that's obviously something that I didn't plan, but hey, we've seen it. We might as well, throw that out. You're going to have to watch this video over and over again if you have to, but it will do you good. I can tell you that. Okay, so here it's definitely a W. Again, it's not too obvious. It's not too obvious, but you have to know, Okay, let me tell you guys, when it comes to buying, I suppose this will make it clearer. You can either look for a W pattern. Oops. You can either look for a W pattern if you're buying, or you look for a V, or guess what? In this case, you look for a U. This is more of a U. You could say it's an extended W, but it's more of a U. Guess what, guys? From today, you are not going to see the chart the same way anymore. Absolutely. You are not going to see, you are going to be seeing the chart with different binoculars. Okay. But anyway, let's carry on. We are looking for a better looking W. It so happened that we spotted a V in the process. We've also spotted a U in the process, but W is what we plan to teach today, and that will be our focus. These are some side, these are like the side dish. These are just the side dish. The side dishes. Okay, let's look for a W or an M. Okay. Because I'm teaching, some of you are learning this for the first time. I want it to be that you get a perfect example. Okay, I suppose this is a good example. Okay, something else I'm also noticing here, don't worry. I mean, I'm saying a lot, throwing out a lot of nuggets and concepts today. I'm sure, by the time you watch over and over again, as you know, is my pattern anyway. I repeat things a lot because repetition is good for learning. So I will keep on saying these things because, that's how it will stick eventually, So why am I saying that? There's a W here. There's a W here. And then there's an M. Okay, there's a W and there's an M. And that is important to note, guys. W formations always follow an M, just like an M follows a W. So as one, well, as I suppose it's wrong to say always, most of the time, when one pattern completes, when a W completes, an M follows. So you can see a W here, and then there's an M. So for the W, this is the first leg, a pullback, a retest, and this is the second leg. So the second leg of the W is the first leg of the M. I know, we are learning too much today. We are learning too much. We are learning a lot, but don't worry, I'll keep on repeating it. It's not too much. Don't worry, it's not too much. I know it's not too much. Somebody say to yourself, it's not too much. I will take it in someday. I'll take it all in. When a W completes, an M follows. And when an M completes, a W follows. Then an M at the top completes, a W follows. My goodness. I think this is the class I am enjoying the most since I started teaching Forex. Now this recording is going to be loaded. I could sell this thing for $5,000, just this alone. $5,000, and that is a discounted price. Come on now, come on, let's go. Let's go, let's go, let's go. Let's go. So we were looking at this one because the whole idea is to find a quicker entry than everyone else. After all, you are a member of GWT. Listen to this, guys. W, that is the pivot. Like I told you, a lot of traders out there are going to be looking to enter this trade at the break of the pivot. Maybe they will enter on this candle or this candle. That's when some people are going to be looking to enter. That's when some people are going to be looking to enter. Let's make this, let's make it blue. Some people are going to be looking to enter at the break of this, maybe on this candle or this candle. Whereas if you were using a moving average, assuming you don't understand price action, you'll be looking to enter, yes, trade this second leg, because we always tend to enter on the second leg. You'll be looking to enter perhaps when price breaks either the 10 SMA, which is the yellow wiggly line, or breaks the 200, or breaks the 50. So you will be looking to enter when price breaks any of these three moving averages. Now, preferably, I mean, this perhaps could still be a tricky one for some, understandably, because you are thinking, okay, we have the 200, the 10, and the 50. They're not quite lined up the way we want them to be lined up. But hey, for safety's sake, if you want to enter a break above the 50, which is what I would always say, I would say whenever you're entering a trade, you know, if they say you should choose one between the 200, the 10, and the 50, go for the 50, because the 200 is for long term, the 50 is for medium term, the 10 is for short term. When price goes above the 50, price is most likely going to continue up. When price goes below that same 50, it's most likely going to continue down. So when price first broke above the 200 here and the 10, you could still say, I'm not quite sure yet. I'm not quite sure yet, you know. But when it breaks above the 50, go in the same direction. So some would have entered here, but as a GWT member, you could have entered here if you didn't enter anywhere before. This is obviously assuming you don't have any knowledge of price action, because if you have knowledge of price action, you most likely could have entered a break above this last red candle on its way down. So price action traders might enter here, because even here, you can see a W. So it's a W within a W. Oh yeah, I know, that's deep, that's deep. This is a W here. 1, 2, 3, 4. But even here, there's a W. There's 1, there's a push up, like I told you, because a W and an M would have two colors. There's the price going down in red, then there's a push up, green, and it came back down again, forming a W. You know what, let me use a different color there. That might make it clearer. Okay, so we've seen that big W, the bigger one, down, up, down, up. Let's look for a different color now. Let's use blue. Let's use blue. Let's go with that. So with this one now, you can see this is the push down, the push up, the push down again before it went up. So this is the big W in pink. I think that's pink. And this is the smaller W in blue. Again, once I have taught you something during the training session, we're going to start trading it and looking for that as well in our live trading session. So guys, sometimes it means that we might spot some things quicker. Other times it will be the case that we take our time to make sure that it's a W or an M we are seeing before us before we enter. We just want to get it right. We want more wins in Forex than losses. That's what we want. And that is, by God's grace, what we will get. So what am I saying here? Some people who trade M's and W's will enter here because it's the break of structure, the break of the pivot, whereas GWT members could enter here when the price goes above the 50 or above all of them in this case, or above some of them. You enter quick and you run. My. You know what? I'm going to look at something more, just a bit more, and then we will take some questions. We will take some questions. We will take some questions. Just 1 minute. Just 1 minute. Okay. So we've spotted M's and W's. Okay, like I was saying a while ago, we saw this W and we saw an M. Like I told you, the W will be at the bottom for a buy and the M will be at the top. That's the way it is. So in that case, it means that if you are identifying one or the other, know where they should be. The W should be at the bottom and the M at the top. Quite unlike a while ago when we saw an M, I can't remember where it was now. I think it was here. I can't remember where it was now. A while ago, we saw an M at the bottom. And I said, no, don't trade an M at the bottom. I know all these things are kind of like going to be, a bit tricky for now, but hey, that's fine. Practice makes perfect. I mean, even after many years of trading, I was still doing some back testing this evening. I mean, yes, for myself, but also for you guys, because the whole idea is to make it, to be able to simplify it, very well, as it were. Okay, I suppose that's all we will take for now. So we can actually, take some questions. Is there anything else to share with you before I suppose when it's question and answer, some more things will be answered. Okay, you know what? Let's do something else. Let's do something else, which obviously is important before you go. Okay. Now here we can see an M. Again, it's not a perfect M, but we can see an M. Let me give you a clue. Like I said, when you spot an M formation, you are selling. If you spot a W, you are buying. So how do you know when to begin to look for an M? It's kind of like easy. If the price has been pushing up, like they say, whatever goes up must come down. It's been pushing up, pushing up, pushing up, pushing up, pushing up. It's time to begin to look for an M. If it's been pushing down, pushing down, pushing down, pushing down like so, in this case, it didn't go too far down, but it still basically went down. And we saw the W formation there. Zig, zag, zig, zag. You see, it doesn't mean that the price has to go all the way down before you spot a W. So also, it doesn't mean it has to go all the way up before you spot an M. Just know that it gets to a point where, an M will be spotted or a W will be spotted. Here, for instance, looking at the moving average, like we've been teaching much about moving averages, when you have it lined up like this, whereby the 10 is on top of the 50 and the 50 is on top of the 200, you know you have to buy. So that also is a clue. If they are lined up like this, you know you are going to be looking for an M at some point. Whereas if it's the reverse, you know you're going to be looking for a W. Okay, one more thing, like I was saying, this is an M. Excuse me. That is an M. Yeah, a slanted M if you like, but it's an M. A slanted M, but it's an M. Even though it now began to go sideways after this second leg, but it still dropped. Otherwise, you could say this was a funny slant, a funny M, of course. You could say bam, 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 bam. Anyway, I suppose we are going to have a second and a third class for this so that some more we can, dive even deeper. Now, what I was going to say was, if you're going to be selling, make sure, make sure the 10 crosses below. Don't sell if the moving average, the yellow moving average is on top. Because look at what's happening here. All the while, the moving average is on top. The yellow is on top of the blue. It's on top of the blue. It came close to it a couple of times where it's on top. So you are still, the trend is still to the upside. Came close. Even though the price dropped below, don't sell. Let the moving average also go below. Went up, came down, eventually it dropped. Then you obviously will begin to think of selling. Guess what? It moved sideways, went up again, dropped again. But obviously, that is going to be, more details we're going to be looking at in the second class or something, not now. I mean, but just to have an idea that you want to be selling only when it has crossed below it. You want to be selling when it has crossed below it. You want to be buying when it has crossed above it. So you are following both the price, which is the candles, and the moving average. This is not a pure price action class. So, we're not, we are including the moving average here. So you are buying, you are following both the price, that's the candle, as well as the moving average. But if it so happens that the price crosses below, but okay, in this case, the price crossed below the 50, but the moving average, the smaller moving average has not crossed yet, don't move. The price crossed below again, but the moving average has not done so, don't move. The price crossed below and the moving average, the 10 crossed below, then you should begin to think of selling. Okay, so what we're going to do, we're going to pause this video now and, we'll take question and answers. Now, this is obviously being recorded for, for our, for people to be able to watch later on. And we are going to pause it. We've basically taught more or less all that we needed to teach in this session. And the more that we're going to be teaching now are just going to be bits and pieces, clarifying things. So if you're watching this as a recording, know that most of what I have dropped today was or is just sufficient for you. You would have to obviously watch the part 2 of this. So yes, if you're watching if you're watching the recording, be sure to catch the second part of this